Jeannie Pumphrey, who is the Senior Director of Alvarez and Marsal, and she leads the third-party risk management area. So, Jeannie, can you first provide a brief background of yourself?
Yes, thank you, Dustin. I appreciate you having me. I'm only one of a many third-party risk managers within Alvarez and Marsal. We have a couple within our practice, highly experienced. So I'll not take credit for being the only one, as well as the senior director. I have myself been in supply chain for about 25 years. I started my career with the Army was in the Army about 8 years. I performed primarily in industry and global operations such as GE, Bank of America, Wachovia, Wells Fargo, NBC Universal, to name a few. I've been with A&M about 4 years, actually 4 years this coming January. My functional experience in supply chain management includes indirect goods and services as well as manufacturing, a lot of supply chain training, organizational development, and of course third-party risk management. I'm also a certified Six Sigma Lean Black Belt and a third-party risk program manager.
Thank you. Well, my first question is, why are you so passionate about third-party risk management?
Third-party risk management is really around the supply chain management from an integrated perspective end to end. Due to the evolving threat landscape, regulators and companies are struggling to keep current, let alone get ahead of the industry. And I've been leading third-party risk management program design and operations since the early 2000s, primarily with the issuance of the GLBA. I've been privileged to have helped both companies and suppliers identify and mitigate risk within their supply chain. I think one of the toughest challenges that both face is the ability to build a program that's nimble enough to withstand the constant change necessary to meet the business requirements, as well as the regulatory guidelines for which they're accountable. So that's really where my passion comes from. Just to give a little background on third-party risk management, third-party risk management is managing the risk that is inherently introduced through the utilization of third parties for either services or outsourcing. A third party, just to kind of lay it out there, is defined by the OCC as any business arrangement between a bank and another entity, by contract or otherwise. And this opens such a broad definition. So you'll see them identified as vendors, suppliers, counterparties, joint ventures, and even parents and subsidiaries are considered third parties. So when we think about risk management and the risk inherently introduced by third parties, we have to look beyond just those initial third parties into their supply chain and see how they're managing their third parties, what we would consider subcontractors or fourth parties, and how they're managing their risk that's going to flow back into the organization. Risk can include, failed performance, data and information breaches, and just bad business practices that we've seen in the marketplace, especially in the mortgage space where people are very familiar with. And as businesses continue to ramp up their outsourcing activities and they look at outsourcing their core business functions to third parties, that risk just keeps growing. And so management of those third parties is not only a regulatory mandate, it's also an imperative to businesses if they want to continue to succeed.
And can you talk more about what it is and who does it impact?
Absolutely. So third-party risk management is managing the risk inherently introduced through the utilization of a third party in either the performance of services for a business or the outsourcing to a third party. Third party, as defined by the OCC, is any business arrangement between a bank and other entity, by contract or otherwise. So as you can imagine, this opens up a very broad definition. Sometimes you will hear them identified as a vendor, a supplier, counterparty, joint venture, and even a parent or subsidiary is considered a third party. So when we talk about the risk introduced by a third party, we have to look all the way through their supply chain, because that risk also comes through from fourth parties, or what we would consider subcontractors. So the suppliers or third parties that our third parties use in performance of those services provided to a company. As that the practice has grown of outsourcing core business practices to third parties, so has the risk involved with, in the company receiving those. And some of those risks have materialized based on bad performance or failed performance, data and information breaches, and just bad business practices, as we've seen in the mortgage industry. I'm sure everybody's familiar with. So not only, is management of third parties regulatory mandate, it's also a business imperative. Who does it impact? It impacts really everyone in terms of, suppliers, employees, stakeholders, and our customers. So when you think about, even from a brand or reputational risk, when you have one of those data breaches, it's going to impact all of those folks on a regular basis. So it's really everybody's responsibility from an organizational perspective to make sure that this is something that they keep top of mind when dealing with any external third parties.
And who needs to pay more attention to third-party risk management?
When we look across the landscape of the third-party risk management within industries, we really see that the financial services industry is probably leading in terms of they've been at this for quite a while. They have, as I mentioned earlier, the GLBA probably prompted the majority of the third-party risk management obligations from a financial perspective. So when we think about who really needs to come up to speed and get with it, if you will, it's really around I'd say the laggers are the insurance and retailers. Retailers, as we've seen in the industry, the breaches are there. They're dealing with, customer information, customer financial data, and the insurance industry, because they're not regulated by the FRB or the OCC, have really not had as much. They've not had as much movement as you would like to see within the third-party risk management space. I think there's an opportunity there for them to take some of the learnings that the financial services industries have had and kind of get up to speed very quickly, climb that ramp and get a program that they could implement to help them in a relatively short period. I think that another group, if you will, that we've seen in the industry are around the community banks and the mid-tier banks, because as they are, some of them regulated by the FRB or OCC, they were never really called out as key constituents of this regulatory guidance until December of 2013 with the latest OCC guidance. So they also have some room to move in terms of the maturity scale. And I think that those we'll see that coming around from both regulators as well as the industry in the next year or so.
And what do you see as the future of third-party risk management?
The future that I would see is really around continuous change, more regulatory influence, more stringent management on those third parties that are considered critically important to organizations. I foresee more internal and external audits of both the businesses themselves as well as their third parties. I see the sourcing and supply chain organizations stepping up to have a better understanding of their supply chain internally and better management of their program processes and procedures on an ongoing basis. And I think that, based on the guidance that has come out recently by the CFPB and the FRB and OCC, I hope that these organizations are looking at scaling their programs based on the services provided by the third parties, so that we stop seeing this kind of one-size-fits-all approach that seems to fail more often than not, and that the service, that the programs themselves are based on the risk involved with the delivery of services. And I think that that's really where the industry needs to go in terms of third-party risk management and how to better manage that supply chain and those third parties.
Well, thank you, Jeannie, for sharing today.
I appreciate it, Dustin. I appreciate your time. Thank you so much.